Gentlemen, welcome back to the channel. Here in this video, we are going to go over all of the data you need to know with AMC stock, this crash event that we are starting to see, and just how bad this could get for the markets. What effect could this have on AMC stock? And I will tell you right now, and I'll actually show you here in the charts, AMC was kind of trending down along with the markets on Friday, but it wasn't doing as bad as some other stocks, right? AMC fell 6.5%. NVIDIA fell 5.5% in regular trading, down 2.77% in after hours. That is almost an 8% drop on NVIDIA on Friday. And NVIDIA was up 2 to 3% in the beginning of the trading day. So the stock went from $974 to $851 in a single day. There's something about that really kills the momentum that can lead into longer downtrends. And I think that will have a very specific impact on our markets and AMC stock. And I want to go over that very clearly for everyone. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. So first and foremost, let's go over AMC stock and exactly what the situation looks like here. And, to be honest, I didn't expect AMC was going to hold up this well after earnings. I'm honestly surprised. And, that's obviously a good thing because AMC, you want to see it at least treading water, right? You don't want to see it continuing to fall. And I think the reason for that is we really didn't get anything exciting on the earnings call. There's no real reason for people to pile into AMC, but there wasn't a huge reason to sell the stock either. It was kind of the same old, same old. We didn't get any new information. We didn't wake up to more dilution from Adam Aron. I think Adam Aron figured that the stock would probably go higher, beating on earnings and then kind of stressing the need to raise cash. For whatever reason, I'm sure Adam Aron believed that would send AMC stock higher. And if that would have happened, maybe we would have gotten dilution. I think it's pretty clear at this point, at $4 per share, you can't dilute shareholders. I think it's only a matter of time before inevitably we do get a commitment not to dilute shareholders. Yeah, I've been wrong on that. I thought this was going to happen a while ago. It hasn't happened yet, but I do still think it will be happening at some point in 2024. Just mathematically, you need to get the stock higher. But again, I'm honestly surprised AMC stock has done so well following earnings, and it really hasn't done well. Let's be honest. You're still trading at really where you were before earnings, right at about this 50-day moving average. You got rejected at that the last 3 trading days in a row now, and that's not great. But overall, you've seen some very positive, constructive price action with AMC. And again, back to that risk to reward, the stock's at $4.30. It can only go to zero. And you are seeing a lot of shorts taking on short positions, and we'll look at that data here in just a second. But it makes more sense to be long in AMC unless the company does ultimately go bankrupt. And then in that case, you're looking at, years down the line between now and then, how does AMC stock trade? Inevitably, it likely goes higher from here, right? After falling this much. You also have other tailwinds like rates coming down in 2024 that could also be positive for AMC stock. Nonetheless, let's go over some of the data here. And I think the first thing that you need to kind of mention is the option activity for this upcoming week. This upcoming week is going to be a huge week in terms of catalyst, right? You're going to have CPI, you're going to have the ARM lockup expiration. SoftBank might be able to sell, as many shares as they want. They own 90% of the shares outstanding, almost 91% of the shares outstanding. So there could be quite a bit of selling pressure in ARM as well as other AI stocks coming next week, not to mention CPI and other catalysts that we have. You could definitely see some downside volatility next week. Now, if for whatever reason we don't see that downside volatility, then maybe that could actually be some upside. We do have a ton of options already sitting in people's brokerage accounts for next week. About 4,400 calls in the money. 259,000 calls out the money, We do have in the money puts at about 32,000, out the money puts at about 109,000. So I think either way you look at this, with this much option activity, you're probably going to get some extreme volatility. And that is kind of my base case assumption. And Friday could have been a crash course on just that. Now, nobody really knows exactly why stocks sold off the way they did on Friday. I'll tell you, if you look at the S&P or you look at the NASDAQ, some of the reversals you've seen from the highs, that's not a pretty thing. When you get, such a strong up day in the beginning of the day, you fall big and then you kind of bounce and then you fall back towards the lows to close the day. That's typically not a good sign. Now, specifically, you've seen semis come under a lot of pressure. It's important to remember that Marvell and Broadcom had okay earnings, kind of in line with expectations across the board. Nothing super spectacular. And Marvell just lowered guidance and missed on a couple metrics of their earnings. So theirs were a little bit worse. Marvell dropped over 11.5%, and Broadcom dropped like 6% or so. So there was definitely some negativity around semis on Friday, but it was really Nvidia. Nvidia just shredded market cap, almost 250 billion or so in market cap. Just roughly estimating here, could be a little bit more, maybe a little bit less, probably a little bit more than that. A lot of money left Nvidia on Friday. Now, I personally think it's because the unemployment rate just hit a 2-year high. That's me personally. I know people are going to say, the unemployment rate going up is actually good news for stocks. No, ultimately, if you go into a recession, that's bad news, right? Seeing the unemployment rate go up is not good news. So no. Now that also makes me wonder, what areas of the markets are not priced for recession risk? And it's obviously semis, right? Semis have always been very cyclical to the economy. If the economy is doing well, semis tend to do well as well. If the economy is doing poorly, semis tend to do poorly. Even, think the last couple of years. Besides the AI boom we've started to see, Nvidia's numbers were going down, right? And the economy hasn't been that strong. I think if you ask the average person for a couple of years now, at least they have not felt that great about the economy for a couple of years now. So I think that was a big reason why you did see that shift. Now, when you get a big momentum kind of shift like this, that's a problem, because Nvidia, these other stocks, they've been trading off of momentum. They have not been trading off of fundamentals. They have not been trading off of anything else, right? It's all been momentum. None of it is fundamentally based. You really have to go out like multiple years to try to justify any of these companies' valuations, and that's just a difficult thing to do when those stocks are starting to fall, right? When the stocks are going up and everyone's wanting to own them and there's FOMO, and then people, can more so get behind 2027 earnings multiples, right? 2028 earnings multiples. But, as the momentum starts to fall and starts to, lose steam like it did on Friday, that's a bit of a problem. Now, with that being said, the stocks have been so momentum driven. You've gotten so far disconnected to fundamental values. Now the markets are like, oh, where should we buy the stock? Maybe we shouldn't buy the dip at, 850 on Nvidia. Maybe we should buy the dip at 750 or 700 or 650 or 600. Where should the fundamental valuation be? And I think fundamentally it comes down to the markets have not priced in any risk for semis, and that jobs report on Friday, that unemployment rate, really shows that there should be some risk priced into semis. There's risk priced into everything else. There's risk priced into small caps. There's risk priced into interest rate sensitive names, cyclically sensitive names right now. Look at the Russell. The Russell's not at all-time highs. And if you look at specific components of the Russell, take out healthcare in the Russell, and the Russell would be much lower than, even where the IWM is right now. So yeah, that's kind of the combination of what I think happened on Friday. Now, I do think this will continue as SoftBank is able to sell stock on this upcoming Tuesday. I'm sure ARM is going to have a pretty rough Tuesday. Does it fall 10%, 5%, 15, 20%? I don't know, probably somewhere around 10%. And I think that helps bring down semis again. Probably Monday, you're going to see a lot of selling too. And then Tuesday, Wednesday, Thursday, Friday, we'll see just the numbers behind the SoftBank lockup expiration are insane. If SoftBank were to sell 1% of their position, it would be about 9.3 million shares. There's only 94 million shares trading hands now, so that would be about 10% dilution to the float that is trading right now. And that's only SoftBank selling 1% of their position. Yeah, if they sell half of 1% of their position, that's still 5% additional dilution to the float that is currently trading right now. That's a pretty big deal. And, half of 1% of their position would be about 4.3 million shares. And that is, well, maybe a little bit more than that. About 4.5 million shares. The average trading volumes are on 15 million for any given day. So you're going to see a big volume spike. You're going to see a lot of sell orders coming in. And we'll see if there's enough people to buy. This momentum could really start to kind of hurt ARM quite a bit coming next week as this momentum has really shifted to the downside. And I do think that sets us up for a larger correction in our markets. 5 to 10% is pretty minimal. Minimum that I'm expecting right now. Now, with that being said, let's give you a rundown of the data here for AMC stock. Over on Ortex, you do have 13.09% short interest off your float. Slowly and steadily, seems like every single day, short interest is rising. And that's good because, I don't think you guys really care what this number looks like in the grand scope of things, unless it were to be like crazy high or something. I don't think anyone's like balking at the short interest. I think everyone that's likely watching this video has been here for a while, and they kind of already know the stock's heavily shorted. There's a lot of synthetic shares, naked shorts out there. There's a lot of shorting activities that we don't get reported on that are covered up. For an example, a short can take on a short position, call it 100 shares of AMC. They can go out and they can buy a call on AMC, and boom, report that they covered on their short position. In all reality, they have not done so at all. And that's just one example of some of the things that could be going on with AMC. But anyways, when people look at this data, when people look at the short interest, if AMC stock does start to actually rally and maybe look good, really get an upside momentum going, people are going to look at that short interest, and if it's 7%, yeah, that's not good. 13%, that's okay. If we can go to 15 or 20 or 30%, which I do think will slowly trend up in that direction, then that would be, well, really good, right? For bringing in new investors to, traders, I should say, to trade AMC. You do have short interest of $157.78 million. 2.15 days to cover. That also continues to rise. That is good. 34.3 million shares that are currently sold short. 45.56 million shares that are currently out on loan. Cost to borrow 1.08%. Utilization of 66.3%. And a short score of 67.67 out of 100. And you do have a cost to borrow max at about 8.5%. So there was quite a bit of shorting activity that did take place on AMC. Last week, really in general. But on Friday, the cost of borrow fees have been spiked for quite a few days now, but you definitely seen that spike get larger on Friday. Now, sentiment for AMC is 40, which considering today is Saturday, that's pretty good. Sentiment yesterday was bearish at 39. Message volumes not dropping off that much. Yesterday it was 52, today it is 49, and the participation ratio is at 55. So quite a few people talking about AMC out there, and that's definitely a bit of good news as well. Now, here in the next video, we're going to be going over some good news for AMC that just came out actually as I was making this video, and some of your biggest upcoming catalyst for specifically AMC and what my expectations are now that we have earnings out the way and we're starting to get a little bit more clarity to what could be coming next in our markets. Hit the like button, subscribe to the channel. Thanks for watching. Enjoy the rest of your day, and I will see you in the next one.